Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage. He was identifying winning stocks with massive uptrends, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,000%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next in any type of market. Simply go to chaikintrial.com for your free look. Again, that's chaikintrial.com.
Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's the 21st of April. It's a beautiful Thursday here in Baltimore, Maryland. We got a big show coming up. We're going to talk about Tesla's numbers, Netflix numbers. One went one direction, one went the other direction really, really poorly. We're going to talk about yesterday. It was 420. That means a lot to some people. To others, you may not know, but it's a big day for cannabis and marijuana. We're going to talk about those stocks. Maybe they're buys at this point. The day before that, you know, was called Bicycle Day. I'll explain what that means. And stocks, that could potentially be a play on 419, which is Bicycle Day. All that and more coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me. It is April 21st, 2022. It is a beautiful Thursday morning here in Baltimore, Maryland. And as I mentioned, we got a pretty good show coming up here for you today. Two sectors I don't talk about that often, but it was kind of their yearly celebrations, if you will, this week. And I apologize we didn't have a show on Tuesday, and you can tell I'm a bit tired here, so the voice cut me some slack here. We got a lot of travel coming up. Next week at this point, I'll be over in London seeing the first vertiport, which is the first flying car airport in the world, getting a VIP tour of that. I'm going to get a ton of video and a lot of interviews for you, so I'll talk about that about a couple days after that. Let me settle down, but we have that coming up. We're doing an issue on that for subscribers that are listening. We got a list of EVTOLs, otherwise known as flying car companies that I think are great purchases right now. So that is next week. So we got a lot of travel up and coming. Let's take a look here at the markets real quick. Take a look at the S&P 500, and we've been open about 45 minutes here in the markets today. S&P is on the low of the session, but still up about 0.9%. And it's about a little over a 1 week high. So we're seeing a bit of a bounce back after the sell-off that we had to begin this quarter here through April. And but holding on, we'll see how we close. We've seen some ugly closes as of late, meaning we have some buying early on and then it doesn't hold and the market sells off. This is the NASDAQ 100 ETF, about 1.14%, up a little bit more. However, again, you can see here on the low of the session. So we'll have to see how we close out today. But, overall, we are seeing the buying met with some selling. And I said about 2 weeks ago, I said I'd be a bit hesitant right now to be too aggressive buying. I personally, for myself, bought 3 stocks, I guess it was last week. Last week. And I'm just kind of nickel and dime a little bit here and there. But I do that all throughout the year. And somebody asked me yesterday, I went to my tailor to get some suits fixed up. And there's ended up being there for 2 hours, talking shop, markets, you know what. And one of the other patrons was saying, well, how do I get started in Bitcoin, which I'll talk about in a minute, Bitcoin. And I said, he goes, should I buy at the bottom or buy in the pullbacks? So I said, I don't know where the bottom is. I don't know when the pullbacks are going to happen all the time. I said, it's much better for somebody who's just getting into it. If you're putting $100 away a month, do $100 a month, 500,000, 10,000, whatever your budget is. But consistently doing it and your dollar cost average down, just like you would do in your 401k or an IRA that you're putting money away, because you're buying at different prices. But over time, you should average down to a nice price because you buy on the dips as well. So that's very much kind of what I do from a basis of investing in stocks. I look for stocks that look like values at the time, my huge watch list, and I buy throughout time because I don't know when the pullback's going to stop or when a rally stops. So I like to continue to do that. So that's where you stand with the markets. Bitcoin right now is actually holding up and doing pretty well. Bitcoin's around 42,500. So it is holding up nicely right here. And it was below 40,000 just over the last week. And then we've rallied back. I would really like to see it break above 45,000 and hold. But right now we're kind of in no man's land, but that's a level that we still have to watch going forward. So let's talk a little bit before we get into all the stocks, and I have about 7 or 8 stocks I'm going to talk about, and a couple ETFs as well in the areas I just mentioned earlier, the 420 and the 419 bicycle day. But before that, there's a couple big movers. The big mover yesterday was Netflix, and I got to tell you, it's mind-blowing to me to see these analysts, the TV commentators. I'm not going to mention the bald guy that's been on CNBC forever, who's loud, obnoxious, and really has lost his mind, in my opinion. I won't mention his name. But he tweeted out that he loved Netflix a couple months ago, and now yesterday morning, I had to tune it on in the morning to see what his view was going to be, and plays it off like I sold it already. I mean, it's just, and maybe he did sell it. I don't know, but it irritates me because the average person out there who follows him, who should not be following this person because of what they say on Twitter and going and buying a stock, I don't think they should do that. All that being said, you have to take responsibility. I have stocks down there in our newsletter right now. A lot of our growth stocks are down pretty big. I still love them long term, but they're down. But I update every month my subscribers on it, why we still hold them, why I like it here, would we be buying here or not. Look, you have to continually do that. You can't just say, oh, if it was bad, damn well if that report from Netflix was good, he'd be praising himself, patting himself on the back. It's a clear joke, and the media is a clear joke. So you need to remember that when you tune in. And now every analyst is double downgrading Netflix yesterday after it fell 36%. It's a little late. It's also down from the $700 it hit in November, and we're at $216. It's a little late. Sure, you have to eventually throw in towel, but my goodness, it's crazy. Where were you for the last few months? If something goes wrong, and granted, folks, I have losers all the time, but I'm going to tell you why, not just come out and downgrade it and say almost as if I knew this was happening. If you knew it was happening, why the hell didn't you sell earlier? So they announced Netflix. The big thing is, to me, there's 2 things I think, and I read a million different reasons why it fell. To me, it's competition, number 1. And number 2, saturation, meaning that the competition right now, me, for example, my place in Baltimore, I still have cable because I got it for sports. A couple years ago, and I've been too lazy to call Comcast or Xfinity to cancel it. And it's a low version of it. So I do have it, and it's just stupid. But it's connected to the internet, and it's a pain in the ass to cancel just the TV. But I also was going through this weekend what I have. HBO Max, Hulu, of course Netflix, Prime, Paramount, and 2 or 3, Disney Plus, Apple TV. That's at least 7. You add all that together, I'm probably paying more than I would pay if I just had regular cable and had everything on there. So Netflix was just the leader at first of streaming. Now they're dealing with, Disney's really adding a ton. HBO Max came out with its numbers this morning. They're adding a ton of new subs. At the same time, Netflix announced for the first time in 10 years they're losing subscribers. And they're projected to lose 2+ million next quarter, or the current quarter we're in, second quarter. That obviously hit it. It was the biggest drop in the stock we saw in 15 years. It wiped out about $60 billion in value, folks. $60 billion. Think about that. $60 billion in value in one day. And if you go all the way back to where it was in November to where it is today, it's wiped out, man, I don't know. It's got to be $200 billion, if not more, probably more than maybe $250 billion, $250 billion most likely that Netflix has given up. So you start looking at it, and there's part of you that thinks, wow, if Netflix isn't going out of business down here, maybe this is a great buying opportunity. I don't like to catch falling knives, number 1. And that's what this is. I mean, it's not as if it just had one bad number. The stock had been coming down already. So I wouldn't look to jump into it, in my opinion, right here. The other thing is, I think there are some fundamental problems. And to give you an idea, I'm just looking at what the market cap got to about $306 billion. So it's down about $210 billion from there. So not quite $250 billion, but $210 billion is a lot of cabbage, as they say. So I wouldn't be looking at Netflix here. You see a gap down in January, gap down again. So last 2 earnings were disappointing. They gap down both times. If I zoom out on this chart, folks, this is the lowest level we've seen since early 2018. And you'd say, okay, listen, Matt, it's got a lot more subscribers than it did in 2018. It charged a little bit more. And they also say they're going to start doing lower subscriptions where you're going to look at ads and pay less. I think it's a great business model because a lot of other competitors do it. Hulu does it and a lot of others. So I think it's a good business model, a little late. But there's just too much competition out there. When I go, I think I probably use Hulu the most, or HBO Max maybe. I also have Showtime, throw that one out there too. I'd say probably HBO or Showtime, depending on what series I'm watching. And then Hulu. I don't know if I use Netflix that often. I'm going to be on a lot of planes, so I'm going to download the most recent season of Ozark and catch up. That's Netflix, but there's not a lot of things I'm going to Netflix for. I'm a huge Office fan. When Office was on Netflix, I'd always go watch that and fall asleep to it and have a little chuckle. But yeah, there's nothing driving me there right now, and I think a lot of people feel the same way. So if you're starting to cut, maybe Netflix gets cut and you keep others. So I think the near term is that there's a downside. So I'd stay away from it. The other big mover today is the numbers that came out last night. Mr. Elon Musk and his company. The stock is still up 8%, but on a low today, giving back some of the gains, is Tesla. So even with the shutdown that they've had in China, they did shut down their Shanghai facility. Still supply chain issues that we've been having for a long time now. They still came out and they crushed analyst expectations. Revenue was up 81% to $18.76 billion. That is extremely impressive. They produced over 305,000 cars in the quarter. Their gross margin was really the big number. With Netflix, it was subscribers falling. With Tesla, the positive number that the analysts and everybody kind of jumped on the Wall Street community was the gross margin increase, meaning the margins for all the products, the vehicles that they're producing are making more cents on every dollar. So that's really good. And they still believe a lot of people out there, they could hit 1.5 million units delivered this year. And that'd be extremely impressive for Tesla, who continues to gobble up market share in the EV market and continues to be the leader of all leaders. I love it. I think it's a great stock. When something gaps up, it gapped up like 10%. Now it's up, as I mentioned, about 8.5%. I don't chase it on a day like this. I think I'm kicking myself because I almost bought under 1,000 the other day and I didn't, and I wish I would have. But I don't buy things with right in earnings because I don't know. The numbers to me could be great and the market could sell off 20%. I don't know. So I lose my edge buying before earnings, so that's why I didn't. But I like it. If it falls anywhere below 1,000 again, I think it's a great purchase. But it might not fall back there. But I do really like Tesla long term, and I think by the end of the Roaring 2020s, the end of this decade, it is if it doesn't split just based on this price, it's around $1,060 right now, $1,060. I think it's at least a $4,000 stock. And I know Kathy Wood came out and said it could be $4,500, $4,600 by 2026, I think. I can't remember what it was. Or maybe by the end of the decade. And I laughed because I said that first. I put it together about 2 years ago. I put together my base case as how it gets to a $4 trillion company, which puts it around $4,000 a share. All right, folks. So I'm going to cover those two big stocks. A lot of people out there own them. And then just for Tesla, like I said, if you own it, keep owning it. I think it's a core holding. Now let's talk about yesterday. It was 420, and if anybody who doesn't know what that is, that's like the big day for stoners, pot smokers, people who are cannabis aficionados. So when it comes to 420, I wanted to take a look at the pot stocks, the cannabis stocks, whatever you want to call them. For me, they have just been hit very hard, and the problem that I see with it is, what is the catalyst, in my opinion, that is going to drive them higher? And I have a chart here I want to show you of a couple of the ETFs out there. And as you can see in this chart, this is over the last year, year to date. This is year to date. The Advisor Shares Pure U.S. Cannabis, which is MSOS, is symbol, down 30%. This was as of yesterday. The Global X Cannabis ETF, down 22.5%. ETF MG Alternative Harvest ETF, that's MJ, down 19.4%. Same time, the S&P 500 down 6.1%. So they're greatly lagging the market right now, just year to date. And most are down even more if you go back to their highs, their yearly high, back in February, a little of a year, I guess you'd say, February of 2021, for example. MSOS, which is a lot of U.S.-based companies, was around $55 a share. Now it's at $17.85 today, folks. So it is taking a bit of a beating. We've had a couple bills get pushed through, and they go through the House, but when they get to the Senate, or they don't even get to the Senate, they kind of die before that, looking to basically legalize marijuana at a federal level, or decriminalize marijuana at a federal level, or make banking available at the federal level. And this is just politics BS is what it comes down to, because the House is passing it, and then it moves to the Senate next to be approved by the Senate. there's overwhelming majority will vote for it. I mean, all these acts will get passed. The MORE Act, for example, which will decriminalize marijuana, it's been passed in the House 5 freaking times. But Chuck Schumer doesn't want to put it to vote. What the hell's he doing? He's trying to add other BS onto the bill and get other things pushed through, and it becomes a political bullshit. Like this is ridiculous. It is legal in 36 states medically, 18 states in D.C. recreationally. If you look at any of the numbers, 2/3 of adult Americans are behind legalization, yet our politicians don't do what we want them to do. We voted for them, we put them in office, and this blowhard Schumer gets it and he keeps saying he's behind it. Well, put it up for a damn vote, because it will be passed. It's complete and utter BS. The Safe Banking Act, which passed in 2019, passed the House 2 times, yet no vote in the Senate. He's not even putting it up to vote. And this isn't political left versus right. Schumer just happens to be a Democrat. But the Republicans are behind it too. So what's going to happen, in my opinion, is if he doesn't do this by the midterms, based on history, likely the GOP can take over the Senate, and then it gets passed. And then I'll tell you what, Democrats, you effed up. Because the GOP, the Republicans, are going to take credit for legalizing marijuana when you have the ability to do that because you have the Senate majority right now. Get your head out of your ass and do something for once, please. Yes, Chuck Schumer, I'm talking to you. Ridiculous. I mean, this is something that we want. The American people want it. Yet, you can't get out of your own way because your god darn ego's too big. So, sorry for the rant, but that is what politics does to our country. Too much BS, folks. Too much red tape. One guy holding up something that should have been done many, many years ago. So let's talk about some stocks, because there are some stocks out there that if you look at them, if it does become legalized federally, which I think it's inevitable, these stocks might do well. So the first one's a stock that I recommended many, many years ago. One of my big winners in this sector. Symbol's IIPR, Innovative Industrial Properties. And this is a REIT, a real estate investment trust that deals with growing facilities for marijuana, legal marijuana here in the United States. The company is about a $4.28 billion company. It pays a 4.26% dividend, so you got a nice yield coming in on that. Revenue is expected in the next 3 years annually to be up 18.5%. Bottom line earnings per share expected to be up annually 21% in the bottom line. That's very impressive. Next year expected to have earnings per share of $7.45 per share. Profitable company, doing well, the leader in its space. I think this is, and it's pulled back from about 285. We're down to 162 now. If I show you the long-term chart, though, you'll be blown away at how look at this. Up to over 280, pulling back. I still think there's good upside potential for it because the business is still booming. It is still booming. So one of the other bigger U.S. ones, I'm just pulling up 2 U.S. stocks to take a look at, is Trulieve Cannabis, symbol TCNNF. And again, you can see these charts. These stocks have been completely crushed. It's about a $3.2 billion company. And you look at sales here. So last year it did $521 million in sales. 2020 we did $521 million sales. This year expected $1.35 billion. By 2024, $1.75 billion. So this is a real company doing real numbers. Earnings per share this year is expected to make 55 cents a share, and then next year $1.02. By 2024, over $1.60 a share. And if you're $1.60 based off 1765, you're trading 11 times earnings based on 2 years out. So again, it's not for a growth stock. It's really trading at a really nice valuation. And then one of its peers, which is Cureleaf, CURLF is a symbol on this one. Again, very similar chart, folks. And this is a little bit bigger. This is a company about $4.3 billion, but very similar numbers. 2020 did $626 million. By 2024, looking for $2.25 billion. Earnings per share are not as impressive. Expected to make a penny this year, be its first annual profit. Next year, 21 cents a share, and kind of flat in 2024, going out that far. So I look at, of the two, if I'm flipping coins, Trulieve looks much better to me. And IIPR is a nicer play, a little less aggressive. Again, bringing a nice dividend, playing the REIT aspect of the business. So those are 3 stocks you might want to take a look at if you're looking to get in cannabis. To me, though, the catalyst might be a few months away, so I don't see any reason to run into it. And the charts, until they kind of turn around, I'd almost rather the chart turn around a little bit before I even decide to jump into it. The other one I want to talk about is 419, Bicycle Day. I didn't never heard of this, honestly, till this year. Apparently in 1943, in Basel, Switzerland, a scientist by the name of Albert Hofmann took the first recorded LSD trip. And the reason they call it Bicycle Day is because he popped his LSD that he was working on in his lab and took a bike ride, like a 4-hour bike ride, him and his assistant. Can you imagine being his assistant? He must have thought his boss was losing his damn mind. So he ended up being really kind of accredited with the founder of LSD. And what's crazy is, according to Rolling Stone magazine, when he set out on April 19th, 419, when he took that dose and hopped on his bicycle going through the streets of Basel, Switzerland, it was 4:20 p.m. was the time. I mean, I can't make this stuff up. I don't know if it's true, but you know, people think LSD, they think, you know, Grateful Dead, all that kind of stuff, acid trips. But what people don't know is that actually he was working on it as a way to treat mental illness, and he did really help open a door for psychedelics and a way to treat mental illness. And we saw a lot of buzz about this about 3 years ago, 2 or 3 years ago, when a lot of the companies started going public that are using psychedelics and different drugs, whether it be MDMA, whether it be LSD, mushrooms, to help treat mental illness versus the pharmaceutical drugs that basically they hand out today. So there are 2 ETFs that track, and I just want to kind of show you them real quick. One is PSY. It defines Next Gen Altered Experience ETF. You can see it's just ugly chart. It started trading back last May, hit 28. Now it's down to 7. The other one is newer. It's PSYK is a symbol, and that's the ETF Series Solutions ETF. The chart doesn't look as bad because it's only been around since February, but it is holding up a little bit better. So I went through some of the top holdings in the ETFs and some of the bigger names, and let's just take a look at them. One is ATAI Life Sciences. The symbol is ATAI. Went public back in June, ran up to about $22. We're down about $5 right now. It's now worth about $827 million. Every company I'm talking about here doesn't have any revenue now and doesn't have any foreseeable revenue in the next 3 years because they have drugs in a pipeline that won't be approved in that time frame. So very early stage, folks. Very, very, very aggressive. But they're developing several drugs based on psychedelic substances. One is ibogaine is one of the substances, and then the other one is ketamine, which is, if you know, ketamine is actually a cat tranquilizer, but it's been known to show taken in the right doses, very small doses, to help with mental illness. So that's what they're working on. The next one you may have heard of, Compass, CMPS is a symbol for this one, and this is Compass Pathways, based over in London. And you can see this was trading up about above $60 a share. It's down around $12.50 right now. It's now worth about $535 million. Again, no revenue. They're doing one drug, one psilocybin therapy called COMP360 is the name of the drug. And psilocybin is the psychedelic that comes out of mushrooms, you know, the funky mushrooms that you eat. Make you see funny things and feel good, I guess. I don't know. So that's another one that's in the leaders here, one of the bigger ones. The next one is Mind Medicine, MNMD. It's about a $377 million company. It trades less than $1 right now. It's up over $5.75 last April. They have 3 clinical stage programs. 2 of them focus on LSD. Thank you, Mr. Albert Hofmann. And a third uses ibogaine, which is one of the bases that substances that ATI is using also. And then the last one is the smallest, is CYBN. Cybin is the name of the company. Again, it was above $3. Now it's down to 73 cents a share. About a $123 million market cap. They have one clinical stage therapy, CYB001, that uses psilocybin, and then they have some other ones in preclinical trials at this point too. So I want to throw those out there. Again, nothing on the show is ever a buy or sell recommendation. And, you know, the charts that I just showed you on the marijuana-related stocks, on the psychedelic-related stocks have been ugly. You know, anything right now that's growth, innovation, early stage, not showing revenue, let alone earnings, are getting hit. So there might be some time where these turn around. I would love to see breakthroughs in a psychedelic area because I think there are huge upside potentials there. And I'd love to see some breakthroughs, you know, for somebody myself who deals with mental health issues and many others that I know. We need some breakthroughs. So I think we will see them at some point during the roaring 2020s. It's a little early to buy now just because I don't know which one's going to be the winner. You're going to have a ton of volatility between now and even moves down the FDA approval process. But again, stuff to throw on your radar. And again, there's 3 things we're trying to do here. Educate you, and I think this is a good educational one on 2 sectors that many people don't know a lot about but they're interested in. We want to have fun. I mean, what's more fun than talking about weed and mushrooms and LSD? And then again, make money is number 3. And I don't know if you could be making money in these right now, but again, put them on the watch list, educate yourself, continue to educate yourself, do some research into these stocks. Maybe you'll find what you like. But right now, as I mentioned, nothing here is a buy or sell recommendation. It's just trying to share ideas with you. So thank you so much for watching. Make sure to give you a market check here real quick. Hopefully we're not on the lows of the session. We're still at the lows of the session. S&P's up about 0.8%. We'll see how we close out today. By the time you watch this, the day will be closed out. But I'm about to get out of here because I have to go catch another plane. And hopefully I get a little bit of sleep on this one. But we will be back Tuesday and from London potentially, unless I might actually tape before I go to London. If not, we'll come live from London at some point next week. Thank you so much for watching. Thank you for your support. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.